Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's focus in on Belrise Industries. The company reported its Q4 earnings today. The stock has surged since, and the company's reported revenue growth of almost 49%. The margins have expanded too. To discuss the quarter gone by and the way forward, we are now being joined by Sumedh as well as Swastid Badve, promoters of Belrise Industries. Good afternoon, gentlemen. This is Vamakshi joining in. I'd first like to ask you about, your growth prospects going forward into FY26. Last time when you joined us, you did not give us a specific number. So, in case, if you can give us a specific number, and X of the H1 business that you've recently acquired, what was the growth like in FY25?
I can take that. So to answer your question, which, as you said correctly, we didn't answer last time, we expect to grow in the mid-teens over the medium term. This will be funded both by organic as well as inorganic acquisitions. And we expect this to be possible given the order book that we have in place today. In terms of the H1 acquisition was actually acquired only on the 28th of March. So there's no real impact of the H1 acquisition to our FY 2025 numbers.
Understood that. What we want to understand from you is we get that you do almost 60 to 65% of the total assembly work when it comes to Bajaj Auto. So going forward, who are the other manufacturers that you're in talks with? And secondly, especially when it comes to the two-wheeler markets, what is the kind of growth that you're penciling in over here?
Firstly, to your point, we are not able to comment that it's for Bajaj Auto or for any other OEM, as opposed to naming any of our OEM customers going forward. Thank you.
No problem. But what is the kind of order book that you're expecting? And what are the total number of customers that you have out there? And are you in talks to onboard new customers in that particular segment?
Right. So in the two-wheeler industry, we have a market leadership. So in the two-wheeler industry, almost 1 out of every 4 chassis that you see on the Indian roads or exported from India is manufactured by Belrise. So as you'd appreciate, the chassis is a very safety critical part of the vehicle. It really allows for the complete vehicle to remain more durable in the longer term. And we have really built our expertise over there. To answer your question, we work with almost all of the two-wheeler OEMs in the country. All of the top 6 two-wheeler OEMs we work closely with. Now, some of the new age EV OEMs that are doing well in the market, we're also working closely with them. So in the two-wheeler space, we'll think about launching new products. So there's 3 new products that we're adding to our kitty in this fiscal year, which will lead to our content per vehicle going up by 45 to 50% in the two-wheeler segment. And secondly, we'll also look to increase our content per vehicle between OEMs. So the ideal content per vehicle that we have today is 12,500, but it's not 12,500 with all of our OEMs. So we'll look to reach that 12,500 content per vehicle range with all of our key OEMs going forward.
Sure. And, with the H1 acquisition that you just mentioned, you were looking to expand your four-wheeler contribution. So can you help us understand what your revenue mix will look like going forward between two-wheelers, CVs, four-wheelers? How would that shape up?
We're currently at about 12.5% with respect to passenger cars and commercial vehicles as a percentage of revenue. We expect that to grow significantly in the next 2.5 years at double-digit growth. And the idea is to focus on, while continue to focus on the two-wheeler industry, we believe there is a larger opportunity for us to grow in the four-wheeler industry where we have a lower base right now.
Sumedh, quick comment.
Yeah.
Pre-IPO, what was the debt level? We understand post-IPO, you paid close to 1,600 crore. So what has the debt now come down to? FY26, what will be the interest cost savings? And could you give us a guidance? You gave us a top-line growth guidance in the range of 15%. Could you also give us a guidance for margins as well as profitability?
Right, sure. So pre-IPO, our debt levels are approximately in the ballpark of 2,600 crores. Right. As you know, we raised 2,150 crores, out of which 75% was going towards debt repayment. So about approximately 1,600 crores of that was going towards debt repayment. That has already been been paid down after the IPO. So now 2,600 minus 1,600, about less than 1,000 crores of debt that's on the books. Going forward from a margin perspective, we expect margins to be stable.
Sure. And, I have to ask you this because, this has been widely talked about. There have been curbs on rare earth elements. While you may or may not use them directly, but I'm guessing there is some sort of second order impact on account of probably, some sort of delays in the production lines from customers. So could you help us, if there is any such impact on production for you?
So, obviously, no direct impact.
Sure, yeah.
In terms of utilizing magnets. We're unable to comment on our customers and how that impacts their schedules or productions. However, we're fully confident that the Indian government will be able to figure out a positive way going forward. Ultimately, the automotive industry makes up a significant portion of the economy, and we're sure there'll be a solution pretty soon.
But any second order impact for you? Not direct, but second order?
Second order, obviously, if there is there's a certain reduction in the number of in the volumes of OEMs as a result of the magnets, there would be an impact.
Understood that. Swastid, if I could get you into the conversation as well, give us a couple of trends that are panning out. Number one, how are raw material trends? Do you typically have longer term contracts with your suppliers? And how are trends coming in over there, especially post the imposition of the import duty of steel? And secondly, are you seeing a significant shift away to the EV space? Do you expect going forward there could be some volume dips that could happen?
So on the raw material side, I think raw materials today are not a major factor in our profitability. Most of our raw material prices are settled on a back-to-back basis, which means the OEM and the raw material producer will settle on a price, and irrespective of what happens in terms of volatility quarter by quarter or year by year, it's compensated to us on a quarterly basis. So we don't really get affected by this whole volatility in raw materials that's being seen in terms of the import prices, going up and down. In terms of what we are excited about, I think high tensile steel is something we're very excited about, because high tensile steel is something that we've acquired through the H1 acquisition.
Right.
So high tensile steel will really allow us to do lightweighting. So perhaps a steel sheet that was 2 mm, with high tensile steel, we'll be able to get that 2 mm down to maybe 1 mm or 0.8 mm. So it allows us to provide more lightweighted raw materials and components to our OEMs. At the same time, due to the malleable and ductile properties of high tensile steel, we'll also be able to increase the durability of our components. So it's a kind of double effect that we're having due to the inflow of high tensile steel, and that will kind of lead to us doing better in terms of lightweighting going forward.
Sure. And, just a word on your margins, Sumedh. So you mentioned that you are expecting margins to be stable. So 12 to 13% range for FY26, that is the guidance that we should work with?
We're not giving guidance per se, but we're saying stable, so yeah.
All right. And are there any levers to sort of improve your margins? Because your contribution to the four-wheeler segment will go up. So definitely that could be margin accretive as well, right?
Yeah. So the four-wheeler and commercial industry usually is a little margin accretive as compared to the two-wheeler industry. However, the main caveat over there is the volumes. There's been a lot of shifts in rankings between four-wheeler and commercial vehicle OEMs that we've seen in the past 24 months. So as long as the commitments given by the OEMs are honored within a say plus minus 5% range, we expect margins to potentially go up by a little bit. That being said, it would depend a lot on the order that we're manufacturing. So the program for which we have won the order and how well that program does in the short term.
Thank you so much, Swastik, as well as Sumedh. There's an investor call later today, and all eyes will be number one on the export trajectory and also, growth, especially when it comes to going beyond the two-wheeler mark. So that'll be something that we'll wait and watch out for. But we'll now